Let's bring in Sonders from Charles Schwab. Do you like small caps on a relative basis because they're cheap?
Well, they are cheap, but I think you still have to have a quality filter. In fact, if you're just purely looking at the index levels, a lot of people don't realize that, Russell 2000 small caps is just sort of put into the bucket by size, whereas the S&P 600, there's a profitability filter. So that's a way to think of it in index terms. But I think you want to look for quality factors, decent earnings profile, somewhat reasonable valuations. I wouldn't just blanketly go into small caps simply because they have a more domestic bent to them.
Yeah, that's been your theme for a while now. So let's talk about the rally today. How does it feel to you? Is it just that we got oversold over a 6-day period, or is it this new idea of central bank intervention? I went away for 4 days, and there were two massive central bank interventions. I mean, major central bankers, Japan and now the UK and the bond market.
So there may be some thinking that, given the Fed has emphasized that they will not step in simply because of financial market volatility. Powell's been pressing that idea back to 2018 and making a point to say that there's a difference between financial market volatility and financial system instability. However, he has suggested that were financial system instability to really pick up, that would be a different story in terms of the Fed stepping back in, whatever that means, considering a pause. So there could be some of that at play from a macro perspective. You're right. We technically got very, very oversold. The market, the S&P had more than 90% of stocks trading above 50-day moving averages back in mid-August. That dropped to less than 3% at yesterday's lows. Yet at the same time, a smaller percentage of stocks were trading at new lows. So there's some indication that under the surface, breadth is improving even as we retested, which is often the kind of sign you want to look for to get a sense of whether we're trying to find stability. It's probably not going to turn on a dime, but that's one potentially positive sign from a technical and breadth perspective.
Just want to point out to everyone, we are at session highs, now up about 537 points on the Dow. Nasdaq's at session highs as well. Nasdaq comp up almost 2%. Remember, it's still about 32% off the highs. This idea of central bankers stepping in over financial stability. So is the point here that what we've learned over the last 24 hours is that financial market instability trumps inflation when it comes to the central bankers' fight, and that the markets could test the Fed to do the same?
Financial system instability, again, to be differentiated from financial market volatility. In the case of the latter, the Fed has said that's not our mandate to keep financial market volatility low. But if you start to see an infection of the financial system, and there's no overt signs of that yet in the U.S., but given what the Bank of England decided to do, there may be some inference that that could be an impetus for the Fed to maybe at least slightly lift its foot off the brake. I'm not suggesting I think that's what they're going to do. I think they would have to see it more acutely in our own financial plumbing system, but that could be one of the background sort of stories behind why the market rallied today, or it simply could be an oversold bounce.
So we're 23% off the highs on the S&P 500. What are the earnings expectations, and do you think at this point they line up with reality of what we're facing in the economy?
I don't think they line up with reality yet. You were closer to $230 in terms of dollar earnings estimated for calendar year 2022. That's now down to $223. Last year was $208. Maybe we don't sink below that for this calendar year, but I think we still have a ways to go on the downside to a point where probably sometime in the next 2 or 3 quarters, we get to a point where that year-over-year change goes into negative territory, which would be very in keeping with what we've seen from a macroeconomic standpoint. I just don't think it's yet manifested itself fully in that re-rating of earnings. I think once second quarter earning or third quarter earnings season starts to get reported, that'll give analysts more color. And I think the path of least resistance for earnings is still down.
Sonders, good to talk to you, especially on a day like today. Appreciate it. From Charles Schwab.